This is Kyrill Asatur, and this is Centerfin Capital's Collective Weekly for the week ending August 16th, 2024. What a difference a week makes. Last week, as you recall, the market started off the week in sheer panic mode. They had calmed down by the end of the week, but this week it's as if nothing ever happened and the markets continued to trade in a healthy fashion, even taking out the lows set during the panic, again, recovering all of those losses and climbing towards the previous all-time highs that markets set in July of this year. We would like to cover a handful of things this week that we thought were important. First, Kamala Harris released her first insights into what her economic policy might look like. Now, this was a big uncertainty for the markets because she became the presumptive nominee for the Democrats just 3 weeks ago. Before that, as we've discussed with you in the past, we didn't think the election was much of a factor for the markets or the economy because both Biden and Trump had similar economic policies. They both embraced a lot of spending. And so the issue of the fiscal deficit was going to continue to be an issue, and the issue of too much debt was going to continue to be an issue. And the good news about Kamala is her policies, at least what she's outlined thus far, don't seem to be very different from Biden's. And so that means that we likely go back to the same realm where the election is not a big factor for the economy and markets. But to just give a little bit of detail as to what Kamala Harris said this week, she outlined policy where she is for a $6,000 child tax credit. She's for a $25,000 first-time homebuyer subsidy. And she also announced price controls for groceries. So basically trying to address what she describes as price gouging to help alleviate consumers' pain when they go to the grocery store. Now, the price caps is something that Biden had talked about also. It's actually been talked about historically by both Republicans and Democrats. This is not a good policy. It leads to actually higher prices because it disrupts the natural way that in a capitalist market environment that things work. But it's nothing new. This has been tried by Democrats and Republicans for decades. The subsidies, again, nothing new from the Republicans. The Republicans also want to do a tax credit for a child tax credit. I think it was proposed at $5,000 a child. So none of this is really that different. The good news is that it seems like Kamala's policies are similar to Biden's, which are similar to Trump's. And so from a market's perspective, there shouldn't be a significant amount of difference in terms of the election in November of this year. Now, just to dig into a little bit more what these policies actually mean and our perspective on them. So subsidies, whether they be through tax credits or just first-time home buyer subsidies or any other kind of subsidies, effectively, when you have a balanced budget, it's really a wealth redistribution mechanism, right? So when you have a balanced budget where the government is spending just as much money as it takes in taxes, when you are giving subsidies or tax credits to a certain part of the population, it's coming out of the taxes of others. It's basically taking money out of the pockets of one part of the population, giving it to another part of the population. Now, with fiscal deficits, which is the situation that we're in right now, it just means the government basically supports it, and the government is obviously supported by all the debt. And so it just means that the fiscal deficit will continue to be an issue. We'll have too much debt outstanding, and the longer term ramifications of that, as we discussed, and this is not specific to these economic policies outlined by Trump or Kamala Harris, is that we are going to have inflationary pressures likely because we're running these fiscal deficits. We are going to have to worry about the value of the dollar, and we are going to have to worry about the yields on bonds that we sell in order to finance this deficit going higher. And again, this is not an immediate issue, but a long-term, very significant issue that you have to keep in mind. The other thing to keep in mind is we got a taste of when the government decides to really print money and deposit it into the citizens' bank accounts like it did during COVID, that does have very severe inflationary ramifications. And so to the extent that either candidate, Trump or Harris, reacts to whatever the next economic crisis is by doing that, we will have to worry about inflation. And so the long story short is that at least Kamala's policies seem to be in line with Biden's, which are in line with Trump's. So the election is not going to be a big factor, at least as of today, for the markets or for the economy. Now, going on to the consumer, we had a little bit of an insight into the consumer. Walmart reported earnings and they beat expectations. They had U.S. same-store sales growth at 4.3% versus expectations of 3.4%. Sam's Club had a 5.2% sales growth. But what was more important is that they actually guided to a higher same-store sales number for fiscal year 2025. They guided to 3.75 to 4.75 range, which is up from the 3 to 4% range. This was a surprise, a positive surprise for the market, because over the last couple of months, the market has started to worry about the economy weakening, and the economy would likely weaken if the consumer was feeling strained. And this gave us a positive read on the consumer. And again, surprise to the market, the stock was up a lot, but good news on the economy and good news for the consumer, which we thought was an interesting data point to highlight. And related to that, we had inflation readings this week. We had the CPI and the PPI, which were very much awaited because inflation has been a focus for the last couple of years. They came in line, maybe slightly better than expectations, at roughly 3% year over year. It's a nothing burger from a market perspective, because as long as inflation is not reaccelerating or going down faster than expected, then the Fed should be able to cut rates in the fall. And it means that the rate of inflation is moving in the right direction. But to take a step back and to remind everybody, that still means that prices are up 3% year over year. It means that the rate of change of prices has come down, but we're still paying more this year than last year when we go out and spend money. And so it's important to keep that in mind. But in the context of the markets and the economy, it seems like this is going to become less of a focus the more that it remains stable and going in the right direction. Now, one thing we wanted to highlight as part of that is, why are we getting all of this conflicting data? A couple of weeks ago, we got a bad jobs number and the market freaked out because it could signal the economy slowing. And then all of a sudden we get this positive Walmart earnings report that shows the consumer is actually doing just fine. We think it's really still a side effect of what we went through during COVID. COVID and our policies responding to COVID had a significant amount of distortion in human behavior. And our economy effectively is the result of human behavior. And so we think that we're still seeing the side effects of the COVID stimulus that we saw, the response to COVID from the government. And it's fascinating to see that there are 1,000 PhDs in economics that cannot make sense of what's going on. But it just goes to show you that you have to pay attention and you have to be mindful of these things, and that you can't put too much stock into projections, because it seems like we're still operating in an environment where the data is not as clear as maybe it was pre-COVID. And it's just something to highlight again, because we are operating in a different environment than we have in the pre-COVID period. That's all we had for you guys this week. As always, any questions or comments, please feel free to leave them below. And if there's anything you want us to discuss in next week's weekly, please let us know. Have a good weekend.